So you originally started this because you're missing money in the company that you helped found, and from there it was the first goal was going full circle reconciliation from transaction to deposit, follow GAAP principles, and then automate that process with exactness. So now that you have created Golden A.I.T technology, how does the automated accounting with accrual and cash revenue accounting tied to the ledger, how does that then change the scope for businesses on a daily basis, monthly basis, yearly basis? What does that mean for them?
So it's a great question. Years ago, as an accountant, you could wait till the end of the month to get your statements and do a reconciliation for the entire month. Today, somebody who waits till the end of the month to try to go out and figure out what happened to them on their cash and with credit cards in particular is a huge mistake. There are problems happening daily inside the industry, and unaddressed, you only have so much time to cure, fix, or put those transactions back through and get your money. At the end of the month, it's too late. So to go back and remember what's happened, to try to get that kind of data, or to go out and have an auth code that you can go back and handle that transaction, your time has lapsed, and unless you can go get that card again or contact a card holder, the opportunity to go after that money is now past, done, and you're sort of hosed.
So basically, when you find industry errors, you have a limited time to go recoup that, or else the customer is not going to associate the transaction with the actual behavior or transaction in a restaurant or whatever the transaction is. So if you're not in there daily or in a very timely way and fixing the rejects or fixing transactions that have errors, you can create problems for yourself by not being in there in a timely fashion.
Correct.
Okay. And so what else? What other opportunities does it
In
create?
addition to transactions timing out or losing that opportunity because the card holder doesn't remember the transaction, so the later you go down the line and you do something, you increase that audit chargebacks. In addition to that, the industry also will time out your transaction. So an auth code only stays in on a transaction for so long. If you run it as an auth transaction, it holds it for a certain time period. If you do a capture transaction and it gets put back into an auth status, which happens all the time, back to a pending, back to an auth on a capture, depending on the processor, you have 14 to 21 days to handle that transaction before it is forced into a cancellation inside the industry, and now your ability to go after it is permanently closed because the authorization that originally existed on that transaction is done and closed. So now you have to contact the customer in order to get the card again to start another transaction. So the longer you wait, as a business or as an accounting group, the odds of you getting paid on that transaction decrease drastically. And so it's a big mistake for accountants to go in once a month and try to do a reconciliation for an entire month when you're not just doing reconciliation, you're also trying to recapture sales that were created in mistakes by the industry that you have an opportunity to go correct and put back into your pocket, but not handle daily. That opportunity times out.
So the technology will flag those errors, and it'll also there's opportunities at a high percentage to do like a one-click fix in the industry today. But if you don't go in and do it within a certain time period, usually a few weeks, then all of a sudden it gets erased, and now it is into a call center where you're going to have to call.
Correct.
Okay.
The odds of calling somebody and having them come in and giving you the card diminishes.
Yeah.
Now the industry is doing what's called a lot of forced voids now. So in the past, as a merchant, you would do a transaction, and if during the same day before you batch settle out of your queue of transactions for the day, if somebody came in and you either refunded or they returned product, you would just void or cancel that sell, called the reversal with the status of void. Today there's now 13 statuses on a reversal. Voids are controlled by the merchant. The other 12 codes are controlled and created, forced on the merchant by the industry, by the issuing banks and the acquiring banks. Can also come from the platforms. So even though you got an approval code and you let somebody walk with the product or service, hours after the fact, an issuer acquirer at an alarming pace and increase in the industry is going back and reversing out your sell after it was approved and you already let somebody walk with product. You have to be in daily to see that that transaction was in a forced reversal, to go back after that person or create an AR so that later when they come in that shop, they know they owe you money, or you got to figure out what your collections or write-offs are. Worst case scenario, it's somebody at a retail shop, they walk, you didn't get the name on a transaction, can't contact them again. You at least want to go do the write-off on your books of cash you didn't collect so you do not pay tax for a sale you didn't see money for. So there's still ways to go out and save money, even if you can't go back and rebill the card. Not handling it on your books causes you to overpay taxes because you're overstating revenues and profits.